All right. Hello, ladies and gentlemen. Thank you very much for joining me on a late notice over here. All right. But I've decided to to carry on and run the portfolio cash flow on Fridays, right, for $2,000 in cash flow with I'm Possible TT over here. Right now. So I'm going to keep this session short because it is later than usual after all. Right. But I decided to go ahead and still do a session because there are new trades that I wanted to add to the portfolio. Right, so I want to make sure everybody can help me verify that we're taking live trades together, right? So I want to insist on running this session, right? Also, right, for all of your benefits, right? Now, so let's quickly go through the drill, right? If you're joining us for the first time, please look at the banner, right, and head over to this website, streamyard.com/Facebook, to approve your profile so that we can see who's leaving comments during the live session. Right now, if you're joining us over here, right, I also like to put up a disclaimer, right, that in this session, I will be discussing about live trades that I'm willing to take and put inside my own personal accounts over here, right? But by no means there are any form of recommendations. Please be aware that all forms of trading bears a risk of loss. So you need to be aware of all the risks involved in the strategy that we apply, in the approach that we take before doing any of these trades in your own accounts. Yeah. Now that is out of the way, all right, if you're joining me, all right, and you're back here, all right, please leave a comment, drop a note, say hi. I'll be more than happy to welcome you. Right. Hello, Patrick. Hello, Maudrine. All right. Now, so today we have numbers that are lower than usual, and that's normal because I'm back late. Yeah. Okay. Now, so without further ado, let's get through the drill over here, shall we? All right. Now, so we'll start off with a market update. All right. If you look at the charts that I keep showing you week after week, this is the SPY, which is the S&P 500 ETF share. All right. Where are we right now? We are at a breakout of the other resistance level. All right. So we're broken above 406 today. Right, and we're now at 408, and that means the index is trading at about 4,080 levels. Right, in fact, it's 4,100 now. Right now, so next resistance that we have is going to be a very, very strong one over here. Right, and that's at 4150. Right now, so how should you take position? Right now, I just want to put things into perspective for you. Right, if you look at how this up move, right, has been ran over here. Right now, so I'm going to activate this drawing. I'm going to move it here until today, and I want you to have a look. Right now, if you look at the slope of this line, can you see the steepness between the slope of this line? Now, so I just need you to understand and think about it this way, right? Does this seem like normal trading to you? Right now, by normal trading, I mean, does this look like retail form of trading to you? Right? Or any human trading? Why? Because humans are down to emotions, which means you should never ever see a straight line that's as beautiful as this at these kind of steep angles, right? It just doesn't exist. Right, because people take profits, people get out of trades, right, and then that will cause the sell-off to kick in, right? But we don't even have a sell-off over here, right? And that means the algorithms are driving the market. The algorithms wants the market to go up and keep going up for now, right? And that's why it's going to keep doing so. All right. Of course, the technicals actually support, right, a little bit more up move, right, before we hit the peak, right? So for many various reasons, right? Okay, there's reasons to cheer for, right? I don't know why. Right, but one of the biggest reasons is that the big tech, right, has held their earnings. Right, they're meant to disappoint, but they didn't. Right, so companies like I believe companies like what was it the other day? All right, Google. Right, Google helped steer the market. Right, and of course yesterday Microsoft helped steer the market as well. Right, and that is followed by Apple today as well. All right, so these are big market cap companies. Right, and they've delivered on their earnings, although it's a lowered bar for them. All right, but they've delivered. All right, so it's not as bad as expected. So the market have reasons to cheer. All right, so led by big tech, all right, the S&P is still clawing its way up. All right, but bear in mind, there's only about another 50 points in the upside, right? But on the downside, right, we have all the way to 3,700. So now, if you chase this market and decide to get in at this very moment, right, you're chasing after potentially another 50 points of upside, right, versus an immediate drop of 400 points. Yeah, so is it worth it? I leave it to your own discretion. Right? Why? Because even at this kind of time, when you're deciding to buy, the only kind of stocks that you should even consider, right, should be stocks that are extremely cheap at this very moment. Right? Why? Because those are the stocks that give you limited downside, right, but a maximum upside. So yes, although it's going against the market, right, but because they've been so severely sold off, right, there's very little downside left in such a stock, right? But if the market continues to keep a bid, right, that's going to keep the stock going higher along with it, right? So that strategy has served us well for some trades that we took last week, right? So we took some new positions in Verizon last week, right, and see what it has done, right, a week from now. Right, so we took a Verizon trade last Friday and see what it's done, right, 1 week later. Right, we also took a new position. Sorry, we also took a new position in Dow Chemicals after its earnings dip, right, and see what has happened, right, 1 week from now. Yeah, okay, so these are the reasons why these are the kind of stocks that you should be taking. Right, now we also trade, right, not too long ago, right, a company like Harley Davidson, right, and look what happened after its earnings, right, is now having a surprising rebound. Yeah, okay, so Harley Davidson's up after its earnings, right? So these are the very reason why you take depressed stocks, right, which continues to remain very, very profitable. Right now, so that is how the way the market outlook is as such, right? So now, right, I'm actually going to go into our positions, okay? All right, now, so let's discuss our positions. The first one being WBA, right? Now, so let me split the screen, all right, in this manner. Should I do it this way? No, I believe I should do it this way. All right, now, so let's go over here. All right, now, first stock over here is WBA. All right, now, so the stock has rebounded a little. It is now at about 39.60. All right, and for our position right now, okay, for what we have, right, we still own the stock at $45. Right, we have not generated any extra cash flow, any income, right, because currently at $39 is still quite far, right, from the stock price itself. Right, but in actual fact, right, there is some kind of income that is actually coming in. All right, I believe this should be better. All right, now give me a minute. All right, why do I say so? Because there is a dividend coming up on the 18th of August, right? And this dividend is actually worth 48 cents. All right, now, am I accounting for cash flow from dividends? No, I'm not. All right, why? Because there's the whole complication of withholding tax, right? And then actually calculating the amount that goes into your account, right? I choose to avoid it altogether, right? So in part of my calculations of hitting my cash flow target, I only take into considerations, right, the options premium that I'm collecting, right? So dividends are out of the picture. They're just like a bonus that adds on to my ultimate goal. Yeah. Now, so with that, all right, this is going to be an extra income that I'm going to collect on 18th of August while holding the stock, right? And for that reason, right, I prefer to hold the stock, all right, than be in an option trade itself, right? So I took the assignment, right, and we are in it right now. Okay, now we have Intel. All right, okay, we have Intel at 42.50 and we have a 42.50 call option that expires on 19th of August. All right, now, so let's look at what Intel has done. All right, it's Intel's earnings day. And what did they do again? Right, they missed and they fall short. They missed and they fell short again. All right, now, this seems to be like a trick for Intel, right? But you need to understand one thing, right? For big conglomerates like this, who never has a problem of generating profits, right? Every time they miss a target, right, the bar gets lowered, right? Now, so eventually the bar is going to be so low, right, that the company has no other choice but to start over delivering, right? And when that starts to kick in, right, the stock price will start rebounding really, really fast. So you might be wondering, Terence, the stock dropped 10% today. Is it 10%? Yes, it dropped 10% today. Are you panicking? Right? My return question to you is, why should you be panicking? Right? Why? Because the company is now trading at 5.9 PE. Right, and that's probably before the drop today. So if you can buy Intel, right, who makes, how much do they make? All right, let's go and calculate it together. All right, now, so 1 year. All right, so they make 171, they make 180, 109, all right, 87, all right, and then what did they report today? My screen doesn't want to play for me. They reported 29 cents today, right? Now, so you add them up, this is about $1, right? And then this one adds to about another $1.80, all right? Now, $1.80, yes. So they make about $2.80, right? And the stock price, right, is trading at about $36 over here, right? Now, so if we do that over here, $36 divided by $2.80, right? So the stock now trades at about 12 PE. Right, because of the drop in earnings. Right now, by 12 PE for Intel, I still do think it's really, really cheap. Right, because this is probably going to be an abnormality over here. Right, they probably did some write-off or something like that. Right, and that's why earnings depressed. Right, but if it didn't get depressed over here, this stock is really, really cheap. Right, so am I comfortable with Intel? The answer is yes. All right, now, so if you had to pull it out over here, right, and let's pull it out to 3 years over here, right, and you can see, right, among the last 3 years, Intel is really at the bottom of the last 3 years, All right, so I'm very comfortable with this stock, so I'm going to continue holding the position. Yeah, okay, and I still believe that we're grabbing Intel at rock bottom price at the moment. Yeah, okay. Anyhow, I've already allocated, right, all the cash required to keep the stock. All right, so I'm not pressured at all. Yeah, okay. Now, so the next one I'm going to do over here is GPS. All right, so let's have a look at GPS. Right, so GPS over here now is at 937. Right, we do have the stock owning at $10. Right, we have sold a $10 covered call, right, at 34 cents. So nothing to be done. Right, it's just a matter of updating you. Right, and our next open position is Abercrombie. All right, so Abercrombie expiring on 16 September. Right now, so there's still a lot of time left. So I'm not going to do any actions on this stock today. Right, besides, right, the stock has barely moved. Yeah, it's moved sideways over the last 1 week. Now, next one, Verizon Wireless. All right, we took a position last week. Let's see how it stands today. All right, we sold the $50 put option, right, for August expiry. Oh, was it August? Yes, it's August expiry. Right now, so let's look at how much the premiums are worth right now today. All right, we sold and collected 88 cents. Right now, let's have a look at the trade. Right, $45, 19th of August. There we go. All right, it's half of it left. All right, now, so we can close this trade today, all right, for about 42 cents. All right, now, so let's go have a look, 42 cents. All right, so the question is, should we close it? All right, should we close it? Should we close it? Did I do a 50? All right, this should be an error, right? All right, give me a minute. Let me go check my position right now, right, and I should be able to tell you. No, it was 50. Yeah, all right, it was 50. I'm looking at the wrong strike. My apologies. All right, because I just remember this trade was done before the drop off, all right, in Verizon. All right, so I'm left with no choice. All right, I'm going to hold the stock because now it's worth $4. So come expiry on 19 August, if the stock price doesn't recover, right, I'm just going to take ownership of the stock. Am I comfortable with it? Yes, again, because this stock is trading at 9 PE, right, and I'm making 5%, right, per annum, right, holding the stock. So rather than staying in an option position, I'd rather own the stock instead, yeah, while waiting for it to recover. Yeah. Okay, now, so let's go to our last position, and that's Dow. So we only took Dow last week, right? So let's have a look at it now. We sold the 16 September $50 puts, right? We collected $2. How much is this worth today? All right, look, it's dropped to about 125 perhaps today. All right, so we can collect about what, 75 cents, all right, 75 cents in premiums. Did I close the? No, I didn't. Where did you go? Oh, it went all the way down. Oh my goodness. All right, so if we close it today, all right, we can make about 75 cents, all right, from the trade itself. Is it worth it? Not really. All right, why? Because I think the stock is really, really depressed. Yeah, again, there's a lot more upside the stock can go. Just to go back to the daily. I do believe that there's still a lot of upside for the stock to go, right? Because the valuations are still really depressed at 6 PE. All right, so I'm going to let this run. Yeah, okay, because the income, right, is really pretty good for the 2 months that I've locked in. All right, now, so I want to go ahead earlier. Patrick, if you're already assigned on VZ, then that's it. Yeah, all right. I do believe that my position is assigned into the stock as well. Yeah, okay. So it's not surprising because for VZ, right, with about 2 weeks left, I think they probably expect that, there's no more hope left. So it's what we call an early assignment, which happens less than 5% of the time. Yeah, okay. But if it happens, it happens. And that's why it's important, right? It's actually important to set aside the necessary allocation, right? So thanks for bringing up that to attention, right? Because since that is occurred to my account, right? So let's record it accurately as well. All right. So right now for trade 24, I will own 300 shares of VZ. All right, the stock. All right. Let's take last week. Last week is going to be 22nd of July, and $50 right now. So we'll consider the option as 0 because we collected all 88 cents of it, right? So that's $264 in cash flow. All right, so that's 0, right? And that's going to happen on 22nd of July. All right, so that's going to be 0, right? And over here, right, it's going to be the stock position. Yeah. All right, so we're going to own the stocks now, 300 shares costing us $15,000 in capital. Yeah, all right, so that's going to cost us $15,000 in capital. All right, so we consider this option as closed. All right, it has turned into the shares, and now we hold the shares. All right, now, so I'm going to add a last position today. Yeah, all right, Patrick, yeah, well done. All right, now if you're happy with it, I'm happy too. Yeah, now, so let's get to our position that I wanted to add today. All right, and ladies and gentlemen, all right, the trade. Give me a minute. All right, now, so the trade that I want to take today is another severely undervalued company. All right, I'm actually going to trade Kohl's today. All right, Kohl's, yes. All right, the departmental store in America. All right, one good thing about it. All right, it pays a 7% dividend yield. All right, now that signals to you that this company is profitable. All right, and it's paying because, it's paying so high because the stock is at a very depressed level. Look, it's 4 PE. 4 PE. I like it. I don't know about you, but I like it. All right. Why? Because, all right, if we pull it out to 1 year, can you see that this company is gushing with cash flow? All right. Okay. It has made 248, right? 4 quarters ago. All right. It has made 165, all right, 3 quarters ago, 220, all right, the 2 quarters ago, right? And the last quarter, right, it made about 11 cents. All right. So all in over here, all right, 250. 165, 220, so that's about 470, 570, 470, 570, 630, 630, 640. So this stock makes about $6.40 in profit, right? In a year. That's a lot of profits, right? For a stock that cost you only $26. All right, so I do see very little downside. Right, if you haven't seen something that I really like, ladies and gentlemen, right, can you see my screen right now? Right, and which metric screams to you, right, that this stock is something you should buy? All right, okay, is there any metric that you see that tells you this stock is something you should buy? All right, why? Because it's so cheap. Anybody? Right? If you do, please leave a comment. Nobody? Oh, man. 5, 4, 3, 2, 1. No. All right, Desmond, I agree with you. The last one, it only reported 11 cents. Is it not worrying? The answer is no. Why? Because I'm showing you a different metric here that screams buy. Yes, Margaret, thank you very much. Margaret, thank you. Go take in. Yes, thank you. Why? Because what is the book value telling you right now? How much is the book value for this company, ladies and gentlemen? $35. What does it mean? If you liquidate everything that this company has today, that means if it goes into bankruptcy, right, this company will pay you back $35. And how much is it selling for? 27. All right, so the stock is trading even below the book value, right? And for a company that's still making profits. Can you see that right now? Yeah, okay, so with the earnings that is made over the last 1 year, right, plus the book value that it possesses, I'm happy to take a trade now. Yeah, okay, and right, this is going to be a trade that I'm going to take. Right now, bearing in mind the drop in earnings the last quarter, right? So I'm going to downsize my exposure. All right, okay, so Desmond, we can control by downsizing our exposure on the stock. Yeah. Now, so I'm going to take a 16 September trade over here to lock in premiums for 2 months. All right, and I'm going to take the $25 put option. Okay, I'm going to take the $25 put option. All right, so I'm going to place that order right now. All right? So I'm going to take a 3 contract for my portfolio over here. So it's not very, very big one considering the stock price, right? So I'm going to go. All right, it's done. Looks like I wasn't good at my negotiation. All right, now, so I sold the coal September 16, $25 put. I sold 3 of them and pocketed 166. All right, okay, so I sold 3 and I pocketed 166. Now, let's go update over here. All right, so we'll break it down into 2 separate months again, all right, because this is still a 2-month trade, right, and this is our 26th trade for our portfolio. 3 options, right, KSS, 16 September, 25. Right, we did this today, 29th, right, and I pocketed 166. Now, so that's the total cash flow, okay, for 3 options collecting 166. That should be a total cash flow, right, of $498. All right, so that's for the 2 separate months. So what I'm going to do is I'm going to recognize half the cash flow, right, for the month of August, right, and right the other half cash flow, okay, into the month of September, right? Because the option does expire in the month of September, right? So I'm just allocating half the cash flow in this month and half the cash flow into the next month instead, yeah? Because this trade spans over 2 months, yeah? Now, so what I've done over here is this, should be a calculation error somewhere. Right, there we go. Should add today's cash flow. All right, and ladies and gentlemen, all right, for this month, our cash flow has hit $3,374. Right, am I happy with it? I'm happy with it. All right, I'm not sure about you, but I'm happy with it. Yeah, all right, let me just double check. No, this is not correct. All right, just need to divide it by 2. There we go. All right, it's still $3,100. I'm happy. All right, I'm not sure about you. Yeah, okay. All right, now, so what shares this is a departmental store, if I'm not wrong. All right, Kohl's. All right, Kohl's Corporation. Let's see what it does. There you go. All right, it's an operator of departmental stores. It operates about 1,100 stores in America. Right, you can go to his website. All right, it sells private and national brand apparels and blah 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 blah. Yeah, all right, now, so apparently departmental stores in America is still profitable. It's still making money. All right, now, Facebook user, all right, can you just go over to StreamYard.com to approve your accounts? All right, now, so I believe that this is probably one of your few sessions you've been here, right? Now, so just for you to be aware, right, for our portfolio on Fridays, right, this is actually a $100,000 funded account. Yeah, so we have 2 targets that are set for this portfolio, right, to generate a 2% return or higher every month, all right, or a dollar target of $2,000 in cash flow. Right, and over the last few months, from May onwards, right, we've been hitting our targets. We made 2,200 in the month of May, 2,200 in the month of June, 2,000 in the month of July. So actually, our portfolio now should be worth what? We should have added it up. Let's do this again. All right, my portfolio should be plus this, plus this, plus this. All right, so the portfolio has grown to $106,000. We're up by 6%, right, over the last 3 months when the index was actually at a negative. All right, so I leave you to make the decision, all right, if our strategies are working or not. All right, so we're bullish to a certain extent, right, but we're still profitable over the last 3 difficult months, right, to the tune of 6%. Right, I'm a happy camper because I spend less than what, 30 minutes a week, right, taking trades on this portfolio. All right, so we're done with the positions. All right, it's an up day, or rather, it's been an up week. All right, so I'm not too keen on adding too many positions. There are not many stocks in such a good bargain as I see with Kohl's today. All right, so that's all for today's session. Thank you very much for still joining me today. All right, I hope you enjoyed it. Right, please remember to help me click the like button, right, and do share it out so that you can reach more people as well and help them build their portfolio in the best possible manner. All right, now to that, all right, I'll see all of you on Facebook Live next Friday once again. This is I'm Possible TT signing off for this weekend. All right, bye for now, ladies and gentlemen. Have a great weekend. I'm spending a full day, all right, with all my mentees tomorrow. All right, our first physical meetup tomorrow. right? So I'm going to take my rest now, and I'll see all of you next Friday. Bye for now.